Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss everything about the stock market's closing action, also how they really panned out in trade, where were the gains and losses seen, and what really happened to investors' investments in stock markets today. All of that coming up over the next 4 to 5 odd minutes. So do stay tuned on to with me. It was an important day of trade because we actually saw investors losing over 3 lakh crore rupees. Now, why was this? Because the stock markets tanked today, nosedived. The Sensex and the Nifty really crashed ahead of the US inflation numbers, coming under pressure of the global equities meltdown as well. Look at the kind of fall that we've seen in today's trade. The Sensex definitely inching down 1,000 points, 54,324 at the closing level. The Nifty declined 275 points or 16,202 points in trade today at the closing level as well. So look at the kind of fall that we've seen. It was an all across the board sell off that we've seen for the markets today. All sectors and broader indices came under pressure. Nifty Bank, IT, financial services, biggest losers in trade today. Also, when you talk about the other highlights, the street traders definitely ended the week on a bitter note. It was the first weekly drop that we've seen in the last 4 weeks as well. The traders remain nervous ahead of the US inflation data due later in the day, and that would definitely have an impact on the next course of action by the US Federal Reserve, perhaps tightening of the pace and higher interest rates or hikes and the aggressive monetary policy coming in going forward from there. And that could definitely be a sentiment dampener for investors across the globe. Now, dragged by the sell off domestically by IT and banks, we actually saw the markets tanking in trade today. The broader markets also slipped in tandem. And when you talk about the kind of sectoral indices fall that we saw, it was an all across the board sell off. I mean, not just IT and banks. Talk about the Nifty also, 16,200 just protected that level by an inch, 1.7% downtick for the Nifty today. When you're talking about the sectoral indices, of course, banks and IT were the biggest laggards. We've also seen the realty space slip about 1.2%. Metals lost their sheen, 1.5% down. Half a percent decline for the PSU banks, 1.7% decline for the private sector banks. The FMCG stocks just flattish to a negative trend. Auto stocks down by 0.2% in trade. All across the board, it was a sell off. Pharma stocks also down by 0.4%, which were the stocks that were the highlights. Despite this kind of a broad based sell off, we saw some stocks really holding up in trade. Grasim on the Nifty index, top gainer, 1.2% uptick right there. Apollo Hospitals, Asian Paints, Davis Laboratories, and Dr. Reddy's, all of those half a percent gainers kind of levels. On the losing side, Bajaj Finance taking a big beating, 4% down in trade. Kotak Mahindra Bank down 4% as well. HDFC, Hindalco, Reliance Industries down 3% as well. So coming down under pressure in today's trading session too. So that's exactly what really happened. But what were the key factors behind the sharp fall that we've seen? I've already talked to you about the US inflation numbers that are expected to come out later today. And if at all there is a sharp pace, we've already seen in the US, the inflation prices or the price rise really happen at a 40 years high pace. In case that it exceeds further, then definitely there could be nervousness on the US Federal Reserve monetary policy front. Also, talk about the rupee currency was a big dampener today at an all-time low of 77.82 per dollar. That was another point of concern. Oil is on the boil. That's another factor that has been hurting India and Indian sentiments because India is a big importer of crude oil, and that could actually hurt the import bill for India. FII sell off, continuous, relentless selling coming about 3 lakh crore rupees worth of sell off coming in from the FIIs over this course of time. In today's trading, first 5 months of the calendar year, we've actually seen a $22 billion kind of a sell off or pull out of 1.6 lakh crore rupees from the local share market. So look at the kind of numbers that we are talking about. It's huge money that is being pulled out from the Indian market. So definitely you have to see that kind of a fall coming in because so far in the last 2 years, FIIs have been completely supporting the market sentiments. And also another factor is the technical patterns, which actually suggest some more downside and some more weakness to come for the Indian markets going forward from here. With that, I wrap up right here, but all eyes next week will be on the macro data, IIP, inflation, how the US markets really trade after the inflation numbers today. All of that will be important to track as we move into the next week. But so far, wishing you all the very best for the weekend as well. Hope you have a great one. And let's hope that the markets also come back stronger. Bulls come back onto the street as we head on to another week. Thanks a lot for joining us on Business Today TV.